Welcome in, everybody, to our Thursday live stream. So, same format, guys. So, those of you that are in the EM community, there is a chat in here specifically under community info. It's 1, 2, 3, 4, 5, 6, 7, 8 down. Q&A for December 15th. Drop them in there. We'll read them from there. Those of you on YouTube, if you want to get us to read a comment, question, whatever, $20 today? $20 goes to charity.
Goes to the Innocence Project. That's a charity that I seem to like.
Yeah.
Yeah. So, So guys, the market is down a lot today.
It's down,
which
last
I like.
3.5%.
Yeah, the Nasdaq's down. So look at Generac here. So Generac's a company I've been following, and yesterday had a big day. Was it yesterday had a big day? I think it was yesterday.
Up or down yesterday?
Yeah, it was up a lot yesterday. And now it's down. Yeah, so these are like the smaller, boring companies with the high ROIC that I look at it going, Generac's the kind of company that just flies under the radar. And that's the kind of thing I like. Just fly under the radar company. I've sold puts on it at much lower prices. It's part of a portfolio of businesses that I want to own. And we do those videos on the channel. And I just feel like, especially as time goes on, generators are a very important part for a lot of people. I don't know how they get replaced.
And it's funny to see. No, I don't think they're getting replaced. You okay?
Yeah, I'm still coming off this illness and like my chest like hurts.
Oh yeah.
I should have a heart attack right here.
Don't say that.
Yeah.
What was it? Oh, Generac. You know, it's amazing. So until we started talking about Generac a couple of weeks ago, that's when I like driving around my neighborhood and I'm like, oh, there's a Generac. There's a Generac.
Yeah.
It's one of those under the radar companies that you might have at your house, but you don't really know or whatever.
Yeah, Mike. I think Mikey does Mikey have a Generac?
I don't know. He has a generator. I don't know if he has a Generac.
Yeah, a lot of people have Generacs though. Like I brought it. It's funny because the other day I was at lunch with Mr. Moscow and I said, you know, I was giving him the list. He was like, "What's this?" I go, "Generac." He goes, "What's?" He goes, "What's GNRC?" I'm like, "Generac." He goes, "Oh, what do they do?" I'm like, "Generators." He goes, "Oh yeah, I have a Generac."
Yeah.
Like that's how under the radar it is, which I kind of like. So, you know, things like that. But I look at other. Let's see. Let's look at crypto. What's crypto doing right now? Ooh, okay.
So I saw an article this morning. It was funny about crypto. It said since the Fed raised rates yesterday, the crypto pulled back below 18,000 again. I'm like, remember this? And this was supposed to be the hedge against all of this.
Exactly. Well, somebody told me the other day it is a hedge because it went down before inflation happened. I'm like, I don't think you understand what a hedge is. So, Rob, why do you guys hate Tesla so much? Rob, it's not a hate. I really don't want to take, and I know it comes across that way. It's a disconnect between price and value. That's it. I just look at what needs to happen to Tesla to justify the current valuation. And a lot needs to happen. And I don't think that's a reasonable assumption about the future. That's it.
And Rob, I talk about this all the time. I sell puts on companies that I want to own. I have a put sold on Tesla. That means that I like the company. I just like it much, much, much cheaper. I have the car. It's a great car. I like the car. I like the company.
Rob said I was trolling.
Oh, okay.
Well, I appreciate that. But you know what, Rob?
I like Rob.
Rob's a great guy.
He's so funny.
But Rob, it's a very good question to ask because a lot of people they have a hard time separating stock and company. So I love that you brought that up. To me, that's a very important aspect of talking about investing is separate your belief about the company versus your belief about the stock price. Because we're all taught buy what you know and love. And it's like, well, yeah, but at what price? And that's the big key. So I do love that you did mention that, even though you know, listen, it just is what it is. But guess what? There'll be a time, Rob, when we're saying to buy Tesla and people are like, dude, you don't get it. They have so many issues. Look at, by the way, did you hear that Elon now is not paying his rent? And
with Twitter,
supposedly he's told people in the company don't pay vendors.
That's what I've heard.
So like, what's the play here?
I don't know. Obviously he has something in mind.
Well, like the day after he closed the deal, he's like, yeah, bankruptcy is a possibility. Yeah. I'm like, you just closed the deal with a bunch of borrowed money. You're going to tell me you're going to say bankruptcy is on the table?
I don't know. And he sold, so it came out today, it's about 22.6, so about $23 billion worth of shares sold this year.
Now, was that part of, so here's the deal.
I think it was part of an overall plan.
Yeah, what was it? Was it part of an overall plan, or did he do it on purpose because of this?
So the only thing is, I believe it was April. I think it was April 28th. He said that he did not plan on selling any more shares of Tesla.
Oh, did he?
But again, that was his plan at the time, and then
Elon's been known to say things that
he's very much overpromise, underdeliver kind of guy. But
when do you think oil stocks will be at fair value? I have no idea, Sean. Are you selling covered? Well, I don't sell covered calls on. I would do that if I were you because it's tax-free income in your 401k. I would sell covered calls.
Write it with super low deltas if you want to keep those shares.
Yeah. Why is my desired return still 12%? You know, Lucien, that's a good question. I don't alter my hurdle rate based on where the market's at because I don't believe that 6% is better than 0% or 1%. I believe that for me to deploy my capital, I should be able to get a certain return. If not, I will just sit on my capital. Like right now, I can get 90-day treasuries at 4.38% or whatever it's at.
Yeah.
So would I rather get, that to me is God, I did not sleep well last night, Mo. Like literally I woke up, I went to bed at 12:45, woke up at 5:45. You know me, I'm not an early riser. I was like, oh my gosh, it was just terrible. Yeah. So anyways.
Somebody wrote in here, please comment on Brazilian stocks and the money environment, PBR, Vale, ABEV. So if you could, I want to kick media, whatever. Can you please throw some of those in the A Few Good Minutes chat? I know I just recently did Vale maybe 2-3 weeks ago, so that's in there. But PBR, ABEV, be happy to do those if you throw those in there into A Few Good Minutes.
Any small cap stocks you want to own? We're not allowed to talk about small caps, anything below $2 billion.
Yeah.
I'm a fan. Okay, gotcha. I was trolling. Hey guys, sorry if this is a common question you've answered before, but I'm interested in how you differentiate between DCA and company buybacks when they're known to be overpriced. You've used the DCA only apply to index funds. Yeah, I believe in DCA for index funds. And if you find a company individually that you believe in and want to own, the dollar cost average on that as well. That's what I do. But again, you got to do what's right for you. A friend of ours recently ran into some money, 7 figures. And he said to me, Paul, I believe you when you say the market's overvalued, but I want to get in. I go, how about you just DCA over 20 months? He goes, I love it. Yeah. And that's what he's going to do. He's just going to take the next 20 months, split his money up into 5% chunks, and he'll probably overall pay less than today, but won't get the bottom. And he's okay with that.
And honestly, in those with the cash that's sitting, he could probably do 90-day treasuries.
And that's the thing. The cash is sitting. He's going to get 4% on that. So overall, he's a young person. He's in his early 40s. His goal is 65, 70 years old. Him and his wife make good money. So that's just the thing. That's where they stand right now.
Why don't you read that question from Chris A.H.?
Okay, watching the video release today, it appears the average fair value line moved to 100% at the present time. It's like, well, Paul changed his stand on the 88% number for market. Well, my method of the S&P, of stock market GDP ratio, is based on the S&P. The one that was on Guru Focus I used to look at was based on something else, a total market index or something. I just wanted to get it to something that I knew and understand, the S&P 500. I don't discount what I said before. What I want to focus on here is I just want to get to, remember, you can grow into a value. And that's the great thing. Like, it's not like if we were 15% overvalued, I'd be like, okay, listen, you're going to find a lot of great deals. Look at it right now. I think there's justifications for a lot of stocks out there right now. Yeah. Even at 65, 70% overvalued, I see a lot of stocks going, hey, there's some justifications going on here that I can get behind. T-Roll Price, which is the video the other day. I'm like,
look at this. I just pulled this up. It's down another 6% today.
Well, yeah, you know what's funny? Last night I wrote a good to close. And I was like, you know what, Paul, just wait for the open in the morning. I canceled it.
Yeah.
And boom, I just wrote some puts this morning.
Awesome.
By the way, I got him at like 4%. So,
awesome.
You know, there's still, like, look at Generac. I don't think Generac, if you bought Generac today, and it does reasonable, I think you're going to make reasonable money. The question you have to ask yourself is, what position are you in and where do you stand? For me, since I have so many options for investment, I can be a lot more patient waiting to deploy my capital. I'm okay sitting on a lot of cash. I'm up this year sitting on a lot of cash. I'm okay with that. That is fine by me. Another thing is 90-day treasuries are paying 4% Before they were paying 0. So I'm still getting some sort of decent return. I'm selling puts. So it's hard to sit there and compare my situation. But for you,
4.28% right now.
A 4.28.
You know.
So I don't know. It's just I wish there was a one size fits all for everybody in investing, but there's not, right?
It's hard because I do look at companies. This is the push pull, and we've talked about it on the podcast. We've talked about it on the show, where you look and say, yeah, maybe Generac, let's just call it, it's in the money right now, buy all day. And you're like, well, the market's you're going to have these days where the stock price is down another 8%. Do you jump in now, or what do you do?
So we had a great question asked of me the other day in the community. Yeah. He goes, somebody wrote, Paul, you love Warren Buffett so much, but you don't do what he says on, he doesn't care about the macro environment. 100% agree. Yep. Gary, my guy Gary, he doesn't care about the macro environment. This is a way, but remember, as I said before, every single person I respect in the world of value investing, I disagree with in certain areas because it doesn't fit my style. For me, because of all the cash flows I have, I'm okay sitting on cash. I can make money on puts and covered calls and 90-day treasuries. So for me, I'm going to sit there and say, you know what? I like Google, and I think Google can be justified at this price. But if the NASDAQ is overpriced as it is, I have a hard time believing that the NASDAQ falls 40%. Google's not falling some big percentage, whether it's 20, 25, whatever the number is. Yeah. Now, you might sit there and say, well, Paul, why'd you buy Bob and Meta? Well, those got so obscenely cheap, in my opinion, that I was like, I could see a situation in which people flock to Bob and Meta from this point on saying, well, look at how much cash flow they have. I'm okay being in Bob and Meta.
When stocks overall get beat up, people flock to cash flow.
Yeah, and then the multiples of cash flow. And I don't think Meta's selling for like Facebook, Google is selling for a reasonable multiple of cash flow, not a obscenely cheap. So I look at that as part of my big issue. When a company gets beaten up so much, Google's down, don't get me wrong, but it's not down like Meta or BABA was. And I think there's that psychological game. And by the way, don't forget, I have puts on Meta and BABA too, because I still want to buy more shares at cheaper prices. So just remember that when you're talking, you have to still do what feels right to you, because that's what's going to get the best result for you. And for me, sitting on a lot of cash feels right to me until I have the opportunity. And I've done this in my life many, many times, where I wait and wait and wait. And then when the right time hits, I go all in. Real estate, stocks in 2008, 2009, real estate in 2009, 2010, 2011. I got aggressive. Somebody asked today, Paul, why didn't you go all in when COVID hit? Because stocks didn't get obscenely cheap. They got cheaper.
Yeah.
But then you get obscenely. Now, in hindsight, I want to go back to Paul and say, hey, you fucking idiot. What are you doing? Yeah. Go buy a ton of shit. But everything's 2020 in hindsight, right?
Yeah.
All right,
let's see. All right, yeah, financials are getting plastered. And you guys still watching T-Row? Yep, that's why I pulled it up. You're absolutely right. $111 and change right now.
Because rates are going up. Bonds Fed bought all lost. What?
What is this? Now with QT. Don't think I get the question, Rob. All right, thoughts on a potential TikTok ban for Meta and Google?
Well, they're talking about banning TikTok in the United States or something like that.
That's what I read.
Well, I read that all government employees who have a government phone can't have TikTok on their phone. I think I read that somewhere.
Have you ever used TikTok?
I mean, I don't have an account on there, but when people send me a TikTok, I click on the link and it opens up another page.
I don't really care for it.
I mean, it's pretty interesting.
I will say this. It's extremely, I like that you can search a certain topic and just watch a lot of content on that one specific topic. What's that? Yeah, you can get in a hole. You get in a hole and just go down a rabbit hole. Exactly. Could you look at Jackson Financial? Hey, Leon, can you throw that in a few good minutes or the video requests chat? I'll be happy to. A PE of 0.5. Wow. Really good growth too. Interesting.
There's a $2 billion limit for stocks you want review. Well, basically what it was a lawyer saying to us, guys, you got to have some limit. What's the limit? And I said $2 billion. They said, okay, fine. They didn't care what the limit was. It was just, and for me, I actually wanted to do a higher number because we want to focus on options, but we thought, it just depends on the company, et cetera. But we just chose $2 billion, and that was that. It's about being consistent. It's just like an IRS. When you go do it's funny. Everybody thinks the IRS is very strict rules. No, it's interpretations, right? And the thing is, it's all about consistency. If you have plenty of consistency, we're just trying to be consistent about a $2 billion number. And at first I picked $1 billion. And I said, no, $1 billion's too low. And if the stocks fall in half, I want to be like, so let's just go $2 billion. And that was that. Can you show us a demonstration on earnings analysis sometime in the future? I know cost of cap. I look earnings power value. I don't know if I'm understanding exactly. I have to look into that analysis. I know cost of capital, asset value are key, but analyzing financials is crucial. Does this have to do with ROIC? Lanao, when selling puts and calls, how much do you guys rely on intuition and picking a strike? It's not really intuition. It's more like, do I want it at this price or not? On the call side, I just basically go off deltas. I have a process. My process is very simple. I'm not telling you to do this. I sell 1/3 of my portfolio at a 0.15 delta, 1/3 at a 0.3 delta, and 1/3 I don't even write. They're unwritten. So that way I have still some upside if it happens to hit. That's it. It's a very simple strategy. It's not scientific. It's just, I believe in pick something, and unless you're going to change it permanently for foreseeable future, stick with it. That's it.
And then on the technical side, I mean, I definitely look at this stuff. Like, this is Apple, for example. So if I'm going to go and sell covered calls on my position right now, I do not think that there is a very strong possibility that breaks through this white line, which is the 200-day moving average. And that is about $153. So maybe I'll go sell 153, 155, something like that, covered calls, because the odds of it breaking through that level in a month or whatever time frame is not very good. So that's kind of how you can use it, but there's no exact science to it.
Correct. And again, I like to take intuition out of it.
Yeah.
My personal opinion, intuition doesn't work for me because, I get my biases. I know my human biases are there, and that's that. Would it be possible to have some definitions, explanations section? Do we have a glossary section? We do have a glossary section.
Click your little
hammer. It's in the app, or is it in the? Oh no,
it's in both.
It's in the app.
Oh,
it's in
right
here,
guys.
Yeah.
Click on your picture. Drop right down to glossary.
Yep.
There you go. And then you have everything you need right there.
Do I think Tesla Model 3 prices will drop in 2023? I have no idea. Chess Matt is actually on the, I assume that's MJ, our MJ. I'm surprised Matt Jensen is not trolling us in our, he's probably, because we're probably ignoring him in the regular chat.
See. Oh, has he sent a message? No.
Get a job, Matt.
He's at the, I think he's at his job or something.
Yeah, whatever.
He's with the maskers over there.
The single most important decision in valuing a business is pricing over power. If you got the power to raise prices without losing, y'all great. That's true. I don't think EM software, besides a high ROIC will show a moat. If it's a consistently high ROIC, that is an indication of a moat. But also thinking intuitively, like Warren Buffett talks about See's Candy and Coca-Cola. He's like, listen, if they raise the price of Coca-Cola 1 penny, nobody's giving up on Coca-Cola. That's the pricing power he talks about. Is it subjective? Sure. I mean, you can't raise the price of Coca-Cola to $30 per can or else people,
price people out.
Yeah. So there's a certain elasticity to it, but it's a great question. I wish we could quantify that. And there are sort of quantifiable things you can look at to determine. And one of the things, as Joel Greenblatt talks about, is a high return on invested capital, a high return on assets that are consistently over time the same or growing will show a good moat. Yeah. And that's pricing power.
It's funny you talk about Greenblatt. Carl just asked, do you guys still follow the magic formula? We don't.
No, my fiance's in it.
Ah, that's right.
And so is my sister.
Right? That's right. Okay, so Paul has involvement in it.
Yeah, I buy it for them because I believe in it. I think it works. I just don't want to think about it.
Yeah.
And I do believe it beats the market over long periods of time. And this year, if you take it off me. Take it off me, and I'll look up my my fiance and how she's doing. So like what's the don't look at me yet. What's the market down this year so far?
Hold on, let me come up here to SP. I'm going to pull up SPY. So
well, I want to do the
I'm going to do year to date.
Yeah, what is it?
Minus 16.4.
So she's down 4.
Oh wow.
So it's but by the way, you have to add some dividends in there.
Yeah.
So call it down your 15% down. All right, listen, good year. It's been a good year. Last year, she did well. She beat the market. But remember, there were years in which the magic formula did not beat the market. Right. But she only got into it last year. She's down about 4% this year. And guess what? There's going to be years where it's up. There's going to be years where it's down. The bottom line is I do believe in the process. And the great news is she just says, go handle it. And I just blindly do it. And about once every 2 or 3 months, I look just to see to update her because she'll say, how's my money doing? I'm like, I have no idea. That's it. So that's that.
Paul, what do you think about Academy Sports Outdoors as a business?
I've never been there.
I have not either.
ASO, right? I think that's the name of the stock.
Yep.
I haven't analyzed it I haven't looked at it in a long time.
I haven't either. It's been a while.
Oh, is Tattoo Chef really up 7%?
Let's check it out. If so, don't buy the dip because it's not dipping. Yeah, it's up 6.15% right now. That's cool.
To go back to him, thank you for answering my question, Paul. I agree it's very subjective. That's the art of investing. I just had a call this morning with my friend Gary about return on invested capital because something's not clicking with me on making a connection between how do I use return on invested capital really drive my future valuations. But even in their conversations, I found myself saying, well, Gary, I don't agree with this, or I'll explain my point. He's like, I can understand that. And he'll even say, Paul, for your situation, I think you're 100% correct. Like it is all situation based. He has a different methodology because he's managing people's money. My methodology is going to be different than his because I'm managing my own money and I have other streams of revenue coming in. So you've got to remember that when doing things like we're not going to all agree with each other, but the main thing we're trying to promote here is a thought process, a mindset and emotion of investing. And that's what's key there. All right.
How much weight do you put on return on equity?
I prefer return on invested capital much more.
Yeah. That's what he was
because I want to see, because equity, listen, both can be skewed by leverage, but I think return on equity is going to be skewed even more by leverage because assets minus liabilities is equity, right? Mm-hmm. With ROIC, it looks at both your return on both liabilities and assets. And that's the big key there. Liabilities and equity. So I look at that going, I want the healthy balance where too much leverage. And again, ROIC can also be affected by leverage, but I think it's a much more equatable thing. And the more leverage you have, the lower all these things factor in. Return on equity, I don't think you're going to go wrong on return of equity. That's the bottom line. If you just stick to that and you like it, great. I've just found that return on invested capital is much more reliable for the future in terms of looking at good quality businesses.
And I think when you pull it out and look at how Buffett talks about it and Munger talks about it, Pabrai, Joel Greenblatt, et cetera, I think they would be talking about return on equity a lot more if they thought that was a more important metric. Don't you think? And Gary.
Yeah.
I mean.
Yeah. And I know Buffett, I think Buffett back in the day used to, I think if you read Intelligent Investor and Security Analysis, there's a lot of discussion about return on equity. I don't know if return on invested capital was even discussed back then. Just like return on assets, guys. That's essentially a return on invested capital in some fashion. It's just, that's the thing about investing. There's a lot of different ways to look at the same data. You got to find the way that works for you. And for me, I told Gary, so we had a call today and somebody asked, is there any way you can share topics tonight? It was purely a discussion on ROIC.
And I think a lot of this will come out in videos that we do over time.
Correct. So guys, the reason I reached out to Gary was, I look at my real estate and my real estate, I love real estate because I buy apartment buildings and every 10 years I can go put a lot of money into apartment buildings and really drive up value. So I have an opportunity to take capital that's already been generated and every year put it into the business in equal intervals. So let's say, for example, I have 1,000 units. I have 600 units right now. Let's just call it 600 units. If I wanted to invest and every 10 years, I'd basically just do 60 units a year. Well, if I do 60 units a year at $20,000 each unit, that's $1.2 million. That's a big chunk. That's a chunk of my profit. That allows me to reinvest the capital being invested that's coming into the business at very high rates of return. And if I'm able to get my 15 to 20% return, that's a 15 to 20% return into my own investment. What do I know best? I know my own investment way better than I know a new investment out there. I'm getting a 15 to 20% return on something I already own. That's what's triggered me to go, okay, so how does it apply to stocks? Well, at some point, a company like Apple. So we brought it up because of Warren Buffett. Warren Buffett's buying Apple, I think, sub 140, just based on what I've seen. And I can't get to that number. And I wanted to tell Gary, I'm like, Gary, I don't get this number. And he always talked about, Apple's.
What did he say about that specifically?
You'll watch it.
I'm going to watch it, yeah.
The invested capital in Apple has plummeted. And that's what's driving up these high returns for them. And he thinks behind closed doors, Buffett's going to Apple saying, you need to start buying back more and more shares. Even though we think it's expensive, he wants that because their base is so big, decrease that base and really increase the return on the money being invested in the business. I'm having a hard time connecting that because I look at everything as like, well, it's my real estate. I can reinvest back in it. And there are two ways to get more growth, more money from investment. It's either grow at high rates of return, which probably for Apple is going to be very difficult.
It'll be harder.
Because they're so big, guys. Now, do I think that 20 years from now, Apple's going to make significantly more money than today? Absolutely. I do believe that. But what's significant? Even growing 3.5% a year for 20 years is 2x your money. That's still a lot of money, right? Yeah. And if you keep buying back shares, you've really decreased your base of invested capital. And that's the key there. So it allows us as investors to then take that money, go put it towards it. Because at some point, Apple's going to pay a dividend when they have no more.
More of a dividend, yeah.
Yeah, more of a dividend,
they pay
right?
Nothing now. How do you keep your hubris in check when you have a community of people relying on your insight of being quote unquote right to help them make money, making decisions? It seems like it would cloud your judgment over time. I think that's a good question.
Great question.
And honestly, we're here to teach a process that we do over and over. And you can see in our discussion, even about ROIC, we make little adjustments here and there, but having comfort in you're doing something correct and it's going to work over a long period of time and you don't have to change on a dime really helps.
So there's no chasing here.
Yeah.
I'm not chasing returns.
Right.
The hard part about all this is I know most people are chasing returns and it's easy to get caught up in day-to-day whims of the market and things like that. That's why we really talk about a mindset and an emotional side of investing. The process, the numbers part is not the hard part. It's about saying, okay, when the stock has fallen a lot, like for example, somebody brought SWBI. I sold that for a tax loss harvest. I'm hoping to buy it back at a lower price. SNBR I bought because Gary and I had a conversation about SNBR. He's like, and he was right. He made a couple points. Incredible. I was like, holy cow, I am wrong on SNBR right now. And I said, I'm out. So I sold out, took a hit, but I'm okay with that because I do believe Gary is right that they're not good allocators of capital. And when the cycle comes through, they'll probably fall to at some point, based on history, lower than $10 a share. So
it was actually quite surprising to see how bad of allocators of capital they were.
Awful.
They were buying everything.
By the way,
back.
it actually made me think to myself, this is a company I don't want to own long term.
Exactly.
It would just be a play on pricing.
Literally, they were buying shares back at expensive prices and not doing it at.
They literally the
cheap
next
prices.
day,
The
after I
opposite.
sold, the next day they announced they're canceling the buybacks.
Yeah, and it was, to me, looking at the price and looking at the valuation, it was perfect time to
So
start
they were buying
buybacks.
back at $120 a share and canceled at 35. It's like,
And it's funny,
Wait, what?
when you look at those smaller companies, a lot of what people say, a lot of what it was in security analysis is you need to be a really good capital allocator. That's what you want from a CEO. And that's not what you're seeing from SMBR.
but the problem is most people don't see that. So
No, they don't.
to go back to the answer though, it's a good value investor will be right 50% of the time. And they'll be okay 30 or 40%, and they'll be, or 20%, whatever the number is. I'm okay with that. I'm okay with just touching my process, and I'm okay with a lot of the things I do saying, Paul, you're wrong. Okay, I'm wrong. I'm wrong. I'm fine with that. However, when I look at the process over a long period, that's why in the chat, whenever people say thank you, I go, guys, and it's funny, today somebody wrote, Paul, I can't wait to thank you in 9.5 years. I'm like,
That's
I love it. I hope you do, because
it's the first
that's what
time
I'm
we got
looking
that.
for. It's not about, for you guys, it's peace of mind's a big thing. And I want you guys to avoid the mistakes that fall to the average person, which is stocks have fallen, I'm scared, I'm getting out. Because I understand that reality. I understand. I've seen many, many friends in bear markets go from saying, I'll never sell to I need to get out before the entire market goes to zero.
Yeah.
And these are real conversations you
The
have.
majority of people out there today are seeing this and panicking.
Did it rebound?
A little bit.
Oh, I thought
Not
that was.
much,
I thought
not
that was
much. No,
the
this is not it. It's
Nasdaq.
right
I
here.
thought that was the
A little
Nasdaq.
bit, but nothing significant.
Oh boy.
What was the book value that Buffett likes on Berkshire to buy back shares?
1.2 times.
1.2 times. There you go.
I think that.
There
Listen,
you go, Rob.
I'm going off of that.
Okay.
Oh, that's for Rob.
Yeah,
Gotcha.
that's for Rob. Yep.
Let me go look at that. Make sure. I believe Warren Buffett said 1.2 times.
You want to see companies buying back shares or being patient during rocky times? I guess it depends. I just don't want to see, and define rocky times. Like we're going into a recession. Maybe they don't spend their cash to buy back shares now, even though it's cheap. But what I don't want them doing is A, diluting for no reason, and B, I don't want them buying back during expensive times. That's really what we've been seeing from a lot of companies out there.
And by the way, why do companies do that? It's a good way to inflate EPS.
EPS, and it makes their earnings quarterly look really good.
And people think themselves, oh, they're buying their own shares back. That's still investing in something.
Yeah.
Yes, it's investing in your own company. And a lot of companies will justify it saying, hey, we pay a 3% dividend. We're saving that 3% dividend too. Yeah, but if you're still overvalued, you're still allocating your capital to an overvalued business.
Right.
And these are the small little things. But guess what, guys? Today I was on the phone call with Gary, and one of the companies that he loves, I'm like, Gary, I don't get it. OI Glass, I just don't get it. It's got too much debt.
We've been talking about that one with him for like 3 or 4 years.
Yeah, I'm just like, I don't get it, Gary.
Yeah.
I don't understand he's like, well, I think it's and he has his points for it, but the point I'm trying to make is if he used all of his other metrics and things like that, he'd be like ignoring it, but he liked it for a reason.
Mm-hmm.
And the thing is, Gary might be wrong on that one, but Gary's got a great process, and that's that. And my process is different than Gary's. Gary says he's agnostic to pricing, to market cap, but he really isn't. He can't. I think he realizes he can't make outsized returns on $300 billion companies, so he has to avoid those. He needs to find more value. And for me, I'm not trying to make. Gary's trying to literally beat the market by 6 to 8% a year, if not more. I'm trying to like sit there and go, I'm good with 2 or 3% plus my options. I'm fully. And he's always looked at me. He's like, yeah, you'll get that. And I'm like, yeah, I'll get that. It's just a matter of time.
Yeah. I was totally floored at dinner that a couple of months ago when he said he would invest in Google.
Listen, what he said was, I was like, when I invest in Google, of course I invest in Google. It's just got to be cheap.
Yeah.
But today he was bashing Google.
Okay. That sounds more like Gary.
Yeah, he was bashing Google today because of their economic profit. But I think he was also, if you look at their economic profit, it's going like this, and then this year it went like that. And so what he was
it's gonna come
saying
back to
was,
baseline.
people are looking at it going like, hey, it's only 10x. I'm like, yeah, I get that, but we believe it's an aberration and all that stuff.
Mm-hmm. What advice would you give someone looking to start a small business in the upcoming year as capital gets tighter? What should we be aware of when operating in tighter, depressed
Save up
financial
money.
times? Yeah.
Save up money.
Spend crazy.
That's it. Save up money.
Google's just over $90. Yeah, I checked that just a few minutes ago. I'm waiting for that 83 number again.
And by the way, J Money, you are right. The way I look at good management versus bad management, are they buying back expenses? Are they allocating the capital properly? Yeah. That's it. That is
really
the big thing
for CEOs. Capital. That's actually probably the number one thing for CEOs, capital allocation. But with the CEOs in today's world, it's all about spend a lot of money, look good, look busy, etc. That's why they do a lot of these. I think that's the road that AT&T went down. They wanted to look super busy and acquire this, acquire that, acquire HBO or whatever it was. And
so it's amazing to me that every great value investor will say you have to be okay doing nothing. And yet we punish people for doing nothing. Mm-hmm. Okay. Yeah. You know, it's, you know, it was a common criticism of me when people said, oh, Paul's not invested. I'm like,
still a common criticism.
Yeah. And I'm just like, okay, that's fine. But then the same thing that people, when stocks were going up and I was barely making money, even though I was still making some, even though the stock was going against me, my S&P short was going against me. Now all of a sudden I'm up a ton. Everybody's like, oh, that doesn't count because you're S&P. I'm like, well, wait, you can't have it both ways. The point is, I'm okay doing nothing. I'm still not doing nothing. I'm still selling options. I'm still doing some investments. I'm getting dividends. I'm investing in my businesses, but you've got to be okay being patient. That's the big thing in investing. And that's the mindset and emotion part we talk about on this channel so much.
Your girlfriend, Kathy Wood, bought 74,862 shares of Tesla today.
Again, yesterday she bought some too.
Oh no, today's Thursday, isn't it? I'm losing my days of the week.
Yeah.
She did it yesterday.
Yeah.
I definitely thought today was Wednesday. Waiting at 83 to short or buy in. No, I want to acquire Google for the long term. That's a good question. I'm not looking to do anything with the charts. Now, I was looking at some charts earlier before this show, and there's some really attractive companies out there right now from a shorting perspective.
Are there?
Yeah, Costco, Apple, and some other big box stores. Can't remember.
By the way, I talked about Costco today with Gary. I was like, Gary, I don't get this Costco thing. And Gary joked and said, I think Munger and Buffett are terrible at selling stocks.
Oh,
they just want to hold on to them for long periods of time. And I go, like, I look at Costco and he goes, yeah, I get what you're saying. But he was like, but they might sit there and say, I'm okay with this return because they can grow into a lot of value and maybe it doesn't. There's multiple ways to skin a cat. That's what this basically says.
Yeah.
Like for me, with Costco, it's at $600 a share. His comment was, well, maybe they don't have any other options, so they just stick with the stock. I'm like, I get that. Yeah.
It's hard sitting on my hands, but I think the S&P is going to go below 3,000 at some point.
If I were a betting person, which I am, I agree with that. How low? I don't know. Remember, every single quarter we have high inflation with GDP growth. It makes the fundamental value of the intrinsic value of the S&P much higher. And that's just it. And that is one thing I've learned in the last few years, that this market can get a lot crazier than I expected it to get. I mean, I did not expect, like, guys, when COVID happened, I remember saying to Mo, it's starting.
Yeah.
I thought that was a start. And then all of a sudden, one day, it just went right back. March 23rd, 2020, it just went right back up and it went to new record highs and over doubled in value. I was like, holy shit.
So the NASDAQ's down 2.9% right now.
What? That's it?
Yeah, it's 2.9%.
No, 3.35.
Yeah, I'm verifying it on Apple. It's moving. Check Market Watch for me.
Oh, you're right. It is.
All right, let's see here. I have never shorted. How do you actually place a short? Rob, you're in the Oracles, aren't you, Rob? And if you're not, just message me in the general chat, and I'll show you how to place an order. Very easy.
Throat hurts.
Very easy. How would you manage your cash if you were capital constrained? Meaning, if you buy a stock that hits the right price, your buy price, you wouldn't have enough to buy at prices depressed. Oh, okay. So you're asking, so if you have $10,000, call it, how do you decide you're going to dollar cost average in? It's a hard thing to do. You got to figure it out. That's all. Really,
I don't think there's a right or wrong way.
There's not.
You could do it all day one. You could do it
because you can put in 1,000 day one and it never hits that price again. Or you can put in 10,000, it drops 30%.
I did it with Southwest. The only time I've ever had a stock like literally just go straight up from when I bought it. And I was disappointed in that. I thought I was going to be dollar cost averaging at Southwest down to $10-15 a share. And it just went sky high. Okay. That was back at COVID. And it's like, listen, these things happen. The great news is you'll have other opportunities. There are 10,000 stocks out there. You'll have other opportunities.
Max, great question here. When looking at trends or looking at trades, how do you, what's your thought on strength and weakness relative to the market? I actually have something called relative strength. So today is a good opportunity to look for that. So the market's down, call it 3%. Go and look for stocks that are up today. Because if those stocks are up in today's environment, imagine what they're going to do on a good day for like a swing trade or something like that. So I definitely go and look for stocks that are doing the opposite of the market on big days.
Like Tesla.
I mean, yeah.
Tesla was up at one point today.
I think last I checked, still is up. And even if it's not up, even if it's barely down, that's something special. And we were just talking about it this morning. At some point, look at this. The market's down about 3% and Tesla's holding strong. So this tells me that we've probably hit that level, 158, that level. And we're going to probably get some kind of bounce here because this thing can't just go down forever.
Guys, it's down 50% in 3 months. I said it saying in the community this morning, I go, Tesla's down 50% in 3 months. That's got to be some sort of, I mean, is that sustainable? It just doesn't seem sustainable. And that's gut right there.
Yeah.
Talk about, and I don't like it, by the way, but I look at it going, okay, I exited my Tesla shorts today and rewrote some at different prices to take advantage of it and locked in my gains on that one.
But Max, look at that. Like that's that support level that I was talking about. And I think we've hit that. So I think that we're probably going to get some type of reversal here. That's a great point that you just made. Look for these stocks with relative strength compared to the market. Excellent point. Really good point.
What are some reasons why companies issue out more shares? 1, the stock is so overpriced, it's better than taking on debt. 2, making an acquisition. Somebody wants their shares. But even then, again, if the stock is overpriced, to me, issuing shares is basically our stock is very expensive. We'd rather give you that than use up our cash or or take on debt for it. Studies show in general it's better to lump sum invest right when it's available, of course. Oh, I didn't know that. I agree with what you're saying, Rob. I personally, I'm a more of a dollar cost average kind of guy, especially with 4.28% on 90-day treasuries. I mean, guys, a year and a half ago, this was 0.06%. Now it's at 4.28. 4.28 to sit there and wait, that's not bad to me. That's my personal opinion, but you got to do what feels right to you.
Ron, this is a good question. You asked, he drew the S&P and he drew these circles on here and says, what's the cause for this? It's all about volume and resistance points. So you can see that this 200-day moving average, the market is struggling to break through that white line here. I'll use green because he used red or purple. Struggling to break through that white line. And when you don't have enough volume to keep pushing stocks to go through these levels, you're just not going to make it. So that's why I think that we're probably going to dip down here, hit somewhere in here, and this trickle effect is just going to keep going. The only way you're going to break through and break through here and break through here and break through, you need a lot of buying volume, meaning you need the institutions, you need the hedge funds, you need the retailers, everybody to be on the same side that we were at back here in 2021, pushing stocks to the top. That's the only way you're going to break these trends. And that's why I like seeing these levels right here. It's just creating such powerful resistance points. So if the stock does get up there, it hits that, basically it hits a wall and it just falls right back down. That's a really nice graph you drew there, Rob, and really good question.
So guys, it's funny. I was just thinking about this yesterday. I was like, man, I really like charts. I really do like just to see trends. I'm not making major decisions on that, but I look at it as a way of just another, what's it called?
It's like another metric. It's like another little
quiver in the whatever. Like it's just another tool to use.
Exactly. And I realize it. I look at them and I'm just like, yeah, of course look, this chart that I just pulled up, let's say that everything changes. Let's say that institutions and hedge funds and retail investors and everybody just starts to buy stocks again. It's going to break all these. It's going to go right back up here and it's going to blow through everything that I just said. But what are the odds that actually happens in this environment, in this recessionary environment? It's not that good. The odds are that this keeps trickling down and keeps following this channel down. All right.
Broad strokes of how you guys calculate ROIC, maybe what other ways there are. So the most common way for ROIC that I've seen is NOPAT. It's net operating profit after tax divided by debt plus equity. Now, which debt, which equity goes in there? And I just had this conversation today with Gary. I'm like, Gary, there are 1,000 ways to do it. And I said to him, what I do is I pick a way, and unless I find a better way to do it, I stick with it. He goes, that's what you're going to do. He's like, basically find your way and stick with it. Now, he also did say that when it comes to individual situations, he will alter how he calculates ROI. And that's why you see it in companies. Companies will alter their ROIC. Now, sometimes it's a manipulative way, but basically what you're looking at is the debt and equity in the business. What kind of return are you getting on that? Now, the way you figure out economic profit is the important part. Weighted average cost of capital. I agree in the lazy way. And ironically, of all the people in the world, Gary agrees with the lazy way.
Wow.
I believe in just assigning 10% for equity and 6% for debt. That's it. I'm not going to go break down how much their actual debt level is. And guess what? How do I know what the equity holders want? All I know is that over long periods of time, you're going to get 9 or 10% in the market. So it's reasonable to say this should be the equity requirement. So if their weighted average cost of capital is below their return on invested capital, they are making economic profit. How you calculate return on invested capital, there's multiple ways to do it. I look at cash flow sometimes. The bottom line is pick a way that has to do with some kind of return on your debt and equity and stick with it until you find a better method that you change it to. The bottom line is it's about looking at relative performance, in my opinion, relative to your weighted average cost of capital. That's where I stand on it. Is it here's the way to do it? No, and trust me, I hate that too. I wish there was just what's the definition? Give it to me right now. But unfortunately for ROIC, there are multiple definitions for it. So you got to pick the one that works for you.
Do you guys weigh different pillars more or less based on the sector that they're in?
Good question. I think so. Like I look at margin a lot.
I think you would have to.
Yeah, I look at margin a lot to decide.
Because when you look at margin of like a car company versus software, yeah, you're putting.
Well, the worst part is car
margin.
companies have terrible ROICs with these terrible margins. I'm like,
yeah,
like that's why I like Ferrari.
Yeah,
they got a 50% gross margin. You know, I look at it going. The other car companies are getting like 12 to 20% on the high. I don't think 20%. I mean, it's a totally different. So in a car business, even then, the only one I like is that one. Tesla, I don't even know where Tesla's margin is because there's so many different fluctuations based on what money are they getting from the government, what's coming in, how much of the money is prepaid from other cars. I just don't know.
What do you think would lead to the Fed implanting QE? Stock market tanking? Like literally tanking. I'm not saying just slowly trickling like the trends I just showed you, like tanking in some capacity where they can't stop it. How did you get into teaching at school? How did you get into it? I just asked.
It's a funny story.
Mine was, I'll tell mine first. My high school baseball coach was the head of the econ department. And we were talking one day and he's like, I don't really understand anything about this. I was like, can I come in and just teach it? He was like, yeah, sounds good. So it's kind of how it spread into the rest of the school.
So the way it happened for me is I once went and talked to an accounting class at my high school. It was like, hey, come talk in. And I really enjoyed it. And then I was like, I really found that I really like teaching. So I went to the school and I'm like, guys, I want to teach investing. And they're like, okay, no. And I'm like, what the fuck? So I kept going back and finally I said, guys, what's this shit here? Like, what's going on? Like, I'm not trying to be a snob, but I donate money to the school. And they'd sat me down. They're like, listen, the same thing happened 20 years ago. A guy did it. Very first day, he didn't show up. And I laughed and go, that's what you really worry about? It's like, yeah, it was very embarrassing for us. I go, guys, I'm going to show up. And I made a joke. I said, if I don't show up, I will donate this amount of money. They're like, okay, come in. And that was 8 years. Well, 8 years, 1 year in the middle of it, I couldn't do it because they had 3 classes for that class I taught. And I couldn't do all 3 classes on the Friday. So they said, if you can't do all 3, we can't do any of it. And I said, okay. So we skipped 1 year. And now that I started the channel, it's become busier for me. So last year I said I couldn't do it. In fact, we signed up for it. And then I was just like, guys, I'm becoming too busy with this other thing on the channel I'm doing. I just got to stop. And I'm dedicating my time to teaching here. How much time do you put towards research of companies over a week? Not very much, Max. You'd be surprised. I try to find companies that are pretty straightforward to understand. It's just like a piece of real estate. It's funny, we've been on trips before where literally Andrew and I will talk about a piece of real estate for 5 minutes. And to me, if it's not that obvious, I just got to move on. So the real estate will make an offer within looking at an 8-figure offer and just be like, oh, okay, cool, do this. And let's see how it goes. Once you get a feel for things, you know what you're looking for. I don't like to get involved in a company where I have to go do nitty gritty detail. That's why I pick bigger companies. I'm too lazy to go do the nitty gritty work of like, how are suppliers doing? How are they doing this? I don't care. I want to find big companies selling for reasonable prices. That's it. Yep. Gianni. That's funny. I love that. Yeah, you do talk Gianni every day.
Yeah, I mean, we WhatsApp back and forth every day. He came in so hot and I was like, who is this guy? And this was so early on when everybody was like, this is great. And then Gianni came in and he's like this kind of bully. And I was like, what is with this guy? And then he turns out he's like the best day trader ever.
Oh, he's phenomenal.
He's unbelievable.
And I love when you ask him, like, when people are like, how do you do it? He's like, I follow the rules.
Yeah.
Like, he's just very simple. He's like, I follow the fucking
no genius
rules.
Here.
God, my chest is really hurting, but not like in a heart attack way.
Well, that's good. You want to be done?
No.
Okay.
I'm still good. But did you see the message I sent Matt?
Yes, I did.
Let's see what he says. Let's look a little.
And Susie, I know you're out there. Merry Christmas to you. And HP too. Do you guys or your families ever use a financial advisor? So I have a funny story about that. So back in, and this goes to perfect example of saying that doctors are some of the worst investors in the world. My dad found this guy in the town we grew up in at Merrill Lynch back in the day. And he lost so much freaking money for my dad because he was doing like all these hot dog things and trying to be this fancy guy. He's no longer in the business anymore. So that was the first fail. And then he learned his lesson and never did it again. So that was good.
So my dad had a financial advisor before I took over. I liked the guy. I thought he was a great guy. I thought he was very conservative. He didn't chase things. I remember talking to him in 2007. He's like, man, just values seem to be really, really high right now. And I was just like, yeah, I agree. And it was surprising to hear that. It's just that it was a commission structure business. And I was like, I just don't like the idea of, and all he bought was mutual funds. And I'm like, whatever. And so he was a great guy.
Yeah.
Really nice guy.
When I was in med school, I really liked the guys that did my stuff when I was in school, but they didn't look at things as undervalued. Like they looked at Amazon in 2018 as a great value.
I remember a financial guy at Morgan Stanley who we were friends with telling me, Paul, I don't understand why you say Amazon's overvalued. It's done very well for our clients. And I'm like, and that's exactly it. You don't understand what undervalued versus overvalued means. Something can go up and still be overvalued, and something can go down and still be undervalued. It's just, that's the hard part about investing is we are reactionary to what the recent price does. And guess what? I fall for that. I still struggle with, okay, well, am I wrong here? Like what can make this good or bad for me? You know what I mean? And that's the hard part about investing.
Financial advisors are a ripoff, but when you get close to retirement, then it might be good to find a advisor who's also CPA tax.
I would just get a CPA.
Get a CPA.
Get a CPA.
We both have a CPA.
And guess what? I've never gone to my CPA for any investment advice, and I never would.
Oh, that's what I would do. Don't go to a financial advisor for that. All they're going to do is play middleman. So you're going to get charged fees, and then you're going to be charged from the tax attorney.
Yeah, I agree. 12 minutes left, guys.
Yeah, send over whatever questions you guys have left. And guys, don't forget, so tomorrow morning show, and then at 9:45, those of you that are in the Oracles of EM, we are going to be doing another Zoom call. So this is actually like my favorite thing that I've ever done in the Oracles of EM. It's a direct Zoom call with me and however many other people are there. If it's one person, then you're the one person. But last week we had like 20. And it was just an open Zoom call. It was awesome.
And that's tomorrow, right?
It's tomorrow at 9:45. So it's pretty much, except for the holidays. So next week we're going to do Wednesday. The following week we're going to do Wednesday. But into the new year, every single Friday at 9:45, we're going to be doing this. So those new people, you get a chance to ask your questions. Those of you that have been here for a while, come on in and get a refresher and help other people. It's going to be awesome.
So the big thing about this whole community aspect is the people who get it know that this is, and even for me, this started as, let me teach you the numbers, and it transitioned to, let me teach you the emotion and mindset. I used to think it was, once you understood the numbers, you're good. And then I started to see all the reactions. I'm like, no, it's not that. It's all about the mindset and emotion. And that's what I want us doing. I don't want this community to become 50,000 people someday of everybody just saying, what can I get today? What can I make next month? And that's why I really accentuate that when people thank me for getting them off. First off, I can spit all I want, but if it doesn't speak to you, it doesn't speak to you. And that's fine. There might be other things that speak to you. But two, it's not only, it's just about applying these things to the real world and to life in general. And I just found that really helped me a lot, just in terms of value investing. And, the funny part was, for a long time, I would look at every sort of purchase I made as an investment. And I've just now recently started to say, Paul, you're just going to make purchases that aren't an investment. You're going to buy a pair of shoes that you might hate after a month and go, I'm just donating these, And I used to sit there and say, no, I can't do that. And that's just realizing that I have to just separate my money and say, this is my piss away money, and that's that. And if I make a bad purchase, I make a bad purchase because I still save 80, 90% of what I make. Well, of course not. Like I'm selling a watch right now that I wore 3 times and I'm selling for probably going to be 30, 40% lower than I paid for it. But at the end of the day, I'm just like, all right, I hope but when I buy the watch, I feel like the money's just gone. So I'm getting I'm getting 60% of my money back. It's just that's hard. The hard part for me being an investor, you sit there and say, return on investment. It's not always the case. Not always the case.
Gianni is short on Tesla right now, and he's up 22%, riding that train all the way down. And from my chart, you could have grabbed this thing on October 7th, was it?
Wicked Willie, I think
October 7th.
cash flow statement. If I were to pick one statement and that's it, it'd be cash flow statement. If you said to me, Paul, that's the only statement you can look at, just give me the cash flow statement for many years. Now, I want to see the balance sheet, things like that, but if you literally said to me, Paul, here's a gun to your head, pick one, it's cash flow statement. I think, Connor, Meta has a higher potential than that. I mean, it's nice to see that. My base is above 157, and I'm still comfortable with my basis. But, you know, I think Meta's got a lot of future potential in terms of really ramping up. I do believe the metaverse is a thing of the future. I don't know when it's going to happen, how it's going to happen, but I look at it going, imagine a world in which we all sit there and pay $5 to go have dinner together in the metaverse at a restaurant that overlooks the ocean, but we feel it's right there. I don't know. I'm talking hypothetically, but does that seem far-fetched? Doesn't to me. No, it doesn't to me at all. Playing football, playing sports, like playing each other in video games against each other. Like, you know, I'm the quarterback, Mo's a cornerback, you know, and Tim's the wide receiver for me. And all these things, it's like, you have your microphone on you?
I know I don't have
Tim's talking. God, my chest really fucking hurts.
I wonder why.
It's like this.
Walking?
It's the breathing thing.
Oh, the breathing thing.
Are we live here on Tim's phone? Tim's microphone?
Do we get to a point where games are played in the metaverse and injuries don't happen anymore and not in real life? I don't know. That sparked in my mind.
Think about that. That's a good question, Tim.
Like 50 years from now, 80
like
years
NFL
from now. I don't
games.
know. Yeah.
I didn't think about that. Now, think about it one way, though. You can still pull a hammy running on a treadmill. That's part of your game. You know what I mean?
But it's a lot less.
True.
But it's going to be a lot less.
True.
You're in a
Like,
controlled
because
environment.
your toe, how did you hurt your toe?
I was moving a stupid, I was moving on those, what's it called? The L-shaped table that goes underneath your couch. So I was pushing it again. I was going like this, and it missed, and I hit the wood base of the couch.
Oh, gosh.
So it cut my nail. I didn't notice it. So that night I was like laying on the couch. I had my foot up like, fuck, Jesus Christ, Mo. So I put my foot up and I noticed my toe was cracked. My toenail, you know how your toenail is like, I'm probably drawing a bad. It was cracked like this. So I just ripped it off. Well, I got an ingrown.
Oh, you actually ripped it?
Oh, I ripped it off. Lisa was like, "What are you doing?" I'm like, "It's still hanging." By the way, it didn't hurt at all until I ripped it off, and I got the infection like that. Like, it was quick. Like next morning, I was like, "Holy shit, that's an abscess!" And I had to call my father. He got me antibiotics, and that was that.
There was a good question here. Where was it? Do you find investing easier or more difficult with the amount of information out there? I actually think in the beginning, because there was so much information, it was very difficult. Now, it's a lot easier because I know where I want to look.
Yeah, once you have a process that works for you.
Yeah.
Remember, so I did this in the community on our quote today, and I really like this. So let me go to the quote section. Quote sharing. Here was my quote today. In matters of style, swim with the current. In matters of principle, stand like a rock. So what that means is there's a lot of data out there. My fundamental beliefs and principles are going to stay the same, but the style in which I'm going to adhere to those principles is going to change with the current. So when new data comes out, I'm going to sit there and say, okay, how does it relate to the whole story? When I started to really understand ROIC, I was like, oh shit, this changes my perspective on valuing a company. I used to value a company with what was last year's profit. Great, add a multiple, and that's it. That's how I managed and valued companies before. Now I'm like, no, I have to pay more for a higher growing business. I have to pay more for a business that makes above its weighted average cost of capital. I have to pay less for a business that's stagnant and not getting a good return on invested capital. These are all things that over time are going to, I hope to God I look back a year from now and say, what an idiot. I can't believe I used to value companies this way. Mm-hmm. Every year I hope I look back at the previous year and say, what an idiot. That's the whole goal here. The whole goal is to always add more to your repertoire to make your principles more and more solid.
Yeah.
But your style's got to change with the new information that comes about. Remember, cash flow statements weren't a requirement until like, I don't even know what year, but it was in the last 50 or 60 years. They weren't even a requirement.
It was pretty recent in the grand scheme of things.
Yeah. So that's part of the whole, everything we do. Leon, it's so true. Oh my God.
Matt is concerned. Matt is saying, watch for slurred speech and grabbing his left arm.
Matt Jones or Matt Jensen?
Jensen, he's messaging me on WhatsApp.
No, it's just my cold.
Yeah.
The chest, it's like literally like a breathing thing.
A very hardo move if you had a heart attack right now.
I was coughing earlier.
Somebody get this guy a Coke Zero. All right,
Well, I
guys.
just can't. Well, let's do cardio chest today. I'm like, man,
Yeah,
I'm not
you
doing
shouldn't do
cardio
that.
chest. I'm doing just a thing. Well, listen, I was sick the last couple of days, and I'm not perfect yet, but
Esports betting has a ton of potential. Going back to that previous
it
conversation.
does. Esports betting has a ton of potential.
How do you guys do your back testing? We use a Bloomberg terminal.
Yeah. And the Bloomberg terminal on our back testing shows that the last 5 to 7 years have been bad for value.
Exactly.
And it's been,
And it's amazing. You put in any value metrics. We
It always
usually will
beats the
take two
market.
metrics.
it
and we'll
always
just,
beats the
and
market.
it's every single time. Even that we
25 years, you crush, not even beat the market, you crush the market just being simple value metrics.
Sometimes we've thought of like the most obscure value metrics we'd never use, and they beat the market. It's like, wow.
Wicked Willie, what is cardio chest? Great question. I put my iPad on a treadmill and I do take my chest lessons while doing cardio. Habit stacking.
What's your plans for Christmas?
Any
Nothing.
time off? Well, my entire life is time off. So, you know, we just had my fiance, I guess you'd say I just had a grandchild. I don't consider it my grandchild. I just like saying it to be funny. But just 2 days ago, she had a grandchild. So I'm sure that's going to be a big focus for us. But we're going to go to Mikey's house, my brother's house, and we'll probably spend it a lot with Mo. Oh, you in a fort? No.
No, I'm not going.
Oh, you're not?
Nah.
So you'll be with us for
I
Christmas?
didn't really want to go.
Or you gonna be with Nicole's family?
Probably just one family. That's what we did at Thanksgiving.
Good idea.
and
So
then-
Nicole's family?
And then the day before or something, I would go over.
Well, Mo used to join us for Thanksgiving because he didn't have somebody in town. Your girlfriends were all out of town
the multiples of them. Yes,
at the same time.
at the same time.
Yeah.
can't
Yeah, I
come to
did.
Texas.
drink
Why?
Pepsi.
I'll be in Vegas.
Oh God. Now Willie's on this one.
Wicked Willie's the best.
Does the Bloomberg Terminal show there were water leaks and dead people voting in 2020? Yeah, for the record, the dead people were also Republicans.
Should I give my well, my grandpa votes Democrat now, but can we talk about how I will believe we live in a simulation and why I
Yes.
believed it today?
Yes.
So Trump put out NFTs, playing cards or something, and I said the only way that we can live, I believe that we live in a simulation now because there has to be a cheat code for his absurdity. There's no way a normal person can be this absurd.
It's so great. I was just like, the guy's an idiot. And Mo's like, we live in a simulation. I'm like, yeah,
I'm
you're probably
convinced.
right.
I'm finally convinced.
Yeah. You know, Elon's convinced of it.
I know. He said it for a while.
That's been a theory that's only been around for 19 years. I think 2003 was the first time that theory really came out. Maybe I'm wrong. I looked at the history on it, but I'm just like,
I wonder who's playing the game. I wonder what system they're using.
maybe it's just one person.
Maybe. I wonder if
Being.
it's like a PlayStation 1000.
Yeah.
All right,
look at
guys.
Look at these amateurs playing PS5.
I know. PS5. They think those are good graphics.
I don't think Munger likes Elon. You're probably right.
Maybe not.
Oh, there it is. Team Paul.
What does it say?
Coke.
100%. Oh, yeah. Okay.
Recycled bottle.
school bottle.
That's great. Oh, look at that.
All right, guys.
Whoever has my character is a fucking genius.
I'll see you guys tomorrow in the morning and 9:45. Those of you that are not in the Oracles, join it tonight. Start reviewing 30 minutes a day. That's all I want. Just 30 minutes a day. You can do anything for 30
Guys, wait.
minutes a
Do me
day.
a favor. 5 minutes a day.
5 minutes a day.
Do
It's
a fucking
nothing.
5 minutes a day. You can do it.
Exactly.
It'll
And-
change your way of
and
viewing
money
things.
back guarantee. We'll see you guys tomorrow. Peace.
See ya.